everybody, welcome back to the channel. I'm Tamarcus Williams, CPA, and today I want to go over a very important topic for business owners who've made over $100,000 in net income this tax season. I want to go over how you can reduce your tax liability by electing to switch from an LLC to an S-Corp and then running payroll to reduce the taxes that you pay. So if you're a business owner looking for ways to reduce their tax liability, stay tuned because this is the video for you. Guys, I'm so happy to be making this video because a lot of questions I got by new clients this tax season is, hey Tamarcus, how are some ways I can reduce my tax liability? I'm paying so much in taxes. So what I've decided to do is do a comparison of an LLC and an S-Corp and how much taxes they pay based off $100,000 in net income. So like always, I will be using my reliable Galaxy tablet to show you guys the notes that I've been taking and give you guys kind of like an illustration of what's going on. So when we take a look at my tablet, first thing I've done is I've taken a single member LLC and I've given it some type of background to it. So let's say that this single member LLC, the person, they're a baker. I love sweets, cakes, cookies, brownies especially. So if you ever want to send Williams Reliable Tax Service some sweets, you know where to find me. So let's say for this baker that they grossed $150,000 and then they had expenses of $50,000 that led to the net income of $100,000. So while we calculate these taxes, there's a couple of things that we need to do first. So on this $100,000 of net income, it is trivial that you have to pay self-employment tax on it. However, the IRS have given business owners a little bit of leeway on this. So, for example, you think you would have to pay the 15.3% on self-employment tax on this whole $100,000, but you don't. You actually only have to pay 92.35% of that is eligible for self-employment tax. The reason behind this, so the IRS believes, so say for example, the IRS would say that, okay, well, if you were a business that was giving somebody a W-2, you would already deduct 7.65% of that self-employment tax from your business. So they give it to you in this breakdown so that you only have to pay $92,350 on this for self-employment taxes. So when we take that $92,350 and multiply it by 15.3%, that's $14,130 in self-employment tax. I think you guys may already know that self-employment tax, half of that is deductible. Why half of it is deductible to get to your taxable income, you will still have to pay that $14,130 in self-employment tax. So we'll go to the tablet. We see that we have $100,000 in net income, and then we can deduct $7,065 in self-employment tax, bringing us to our AGI of $92,935. Now, for a single taxpayer, the standard deduction is $12,550, and as you may already know, there's different standard deductions depending on how you're filing. You can file as single, head of household, married filing separate, married filing jointly. But we're going to keep it simple for this example and say that you're a single person and your deduction is $12,550. That gets you to $80,385. But the IRS, they got more for you. Another good thing that the IRS has done, they have given business owners something called the qualified business income deduction. And this deduction is 20% of your income after you've calculated self-employment and the standard deduction. So that's another $16,077 you get to deduct, which gets you to your taxable income of $64,308. Now, on that $64,308, we have to pay federal taxes. So I have included the tax brackets below. This is as far as we need to go for a single filer for $64,308. Their max that they would get taxed at is 22%. And you can see a tax bracket that's filling a bucket. To get to the next layer on the tax bracket, you have to keep filling the bucket up. So, for example, on the first 10% on your first $9,950, you'll get taxed 10%. So we've already filled up that bucket. On your next bucket of income is $9,951 to $40,525, and that's taxed at 12% to get you at $3,669 in taxes. And then on the final bucket, which is 22%, is everything over $4,525 is taxed at 22%, getting us at $5,232 in tax. So when we add up all these tax buckets, we get $9,896 in federal tax. So as of right now, for federal taxes, we have to pay $9,896, and then self-employment tax is $14,130, and that's a grand total of $24,026. But wait, there's more. We haven't even gotten to state taxes yet. So I live in the state of Indiana, so I'm going to calculate the state taxes based off of Indiana tax return. I know you may be living in different parts of the United States, but I'm just going to keep it simple and calculate the tax on something that I know, where I've been. So we have to, for the state of Indiana, it doesn't tax the $100,000. It actually taxes your state income starting with your adjusted gross income. And depending on if you're a single or married filer, you get a deduction. A single filer gets a deduction of $1,000, which gets your taxable income to $91,935. And the state tax rate in Indiana is 3.23%, which leaves your state tax to be $2,969. And that's really before any county tax as well. There's so many different counties in Indiana: Marion, Hamilton, Hendricks, LaPorte. So I just decided to calculate it without the county tax. But when you calculate everything, that gets you a total tax liability of $26,995. I don't know about you, but I wouldn't want to pay that. That has basically dropped you from a six-finger earner to making a little bit over $75,000 or $70,000 a year. I don't know about you, but I would definitely love to save on that tax. But I'll have a way for us to save. So let's say that you make the S-Corp election. So the S-Corp election, if you don't know, I've covered it in other videos, but basically you have to file Form 2553 to let the IRS know, hey, I want to be taxed as an S-Corp. And when you're approved for your S election, you can do this with your taxes. But first thing, the most important thing you need to know is that you need to pay yourself a reasonable salary. So I believe a reasonable salary for $100,000 in net income is between $30,000 to $50,000. But to keep things simple, I'm going to say let's meet in the middle and let's do $40,000. So the first thing we're going to do, we're going to calculate the tax on the non-payroll of the reasonable wages portion of your tax that you have to pay. So you have $100,000 in net income. That's everything after the things you have to buy for your business, and we're going to deduct the salary of $40,000. Leaves you with $60,000 in net income. So we already established that we're a single filer. So that's another $12,550 that we get to deduct from the business, which then in turns it leaves us with $47,450 of adjusted gross income. And then we also can take the qualified business income deduction for another $9,490 of deduction, leaving us with a taxable income of $37,960. Now, I know I already have left the tax brackets above, so you can go see kind of what the breakdown what the different brackets are. But with $37,960 of income, that leads us that we're only eligible up to the 12% tax bracket. So the first 10% we're going to have to pay $995, and then the next bucket is 12% where we will have to pay $3,361, leaving us with a federal tax of $4,356. And then don't forget we need to calculate state as well. And we already know that state tax is first based off the AGI in Indiana, plus the $1,000 deduction you get for being just a resident of Indiana, which leaves you with a taxable income of $46,450, taxed at 3.23%, leaving us with $1,500 in state taxes. So the total taxes for the non-payroll portion of our S-Corp is $5,856. But now let's calculate the payroll portion. Let's calculate the tax on the payroll portion of our S-Corp. So remember that $40,000 is the reasonable salary that you've agreed to pay yourself throughout the year on all your net income in your S-Corp. So for that $40,000, you have to pay 15.3% self-employment tax. So that equals out to be $6,120 in self-employment tax. And then based off the tax brackets, you're only eligible, since you're only paying yourself $40,000, up until the 12% tax bracket. So the first 10% you're going to have to pay $995. Then the next bracket is 12%, where you have to pay $3,606, leaving you with $4,606 in federal taxes. And then the federal and self-employment taxes total is $10,721. And then if we calculate state, that would be $1,260. So your total payroll on your $40,000 would be $11,981, leaving you with a total tax as your S-Corp at $17,837. Now, if we look at the difference between the LLC tax and the S-Corp tax, you'll see that that difference is $9,158. I don't know about you, but that's a load of savings just by making a simple election before the beginning of the next tax year, and you can save $9,158. If you think about it, that money can be used to invest in your business. You can buy, more supplies for your business, maybe more advertising via Instagram or Facebook, or you can even buy different things like a car in your business name, which can lead to another deduction, the vehicle deduction, which is in Section 179, but that's for a total other video. But some things that I do want to make you guys aware of when you do make the election from an LLC to an S-Corp are the following. One, you will have to pay more to get your tax return prepared. When you just file as an LLC, you just file a Schedule C and attach it to your 1040, and they're all filed at the same form at the same time. However, when you file 1120S, you have to file the 1120S separate from your 1040 and use a K1 to enter the information on that K1 into your 1040. So another thing you need to be wary of from an S-Corp, from a 1040, you may have to pay $600 to $700 more to get that prepared. Also, running payroll, depending how frequently you want to pay yourself, whether you want to pay yourself weekly, bi-weekly, monthly, payroll can run you another $150 to $200 a month. But depending on how often you want to run payroll, can definitely get that reduced. And then also bookkeeping may run you $200 to $250 a month. So with that $9,158 in saving, just based off all those different things you would have to think about when running an S-Corp, now the difference would only be $3,758, which is still not bad. You definitely can probably find a tax preparer if you have them do all your bookkeeping, payroll, and your tax preparation. You probably won't have to pay that big of a difference. You might have to pay, maybe like $1,500 to $2,000 more from what you would have to pay from an LLC. But it just really depends on the tax preparer, but you always want to ask that question on how you can save on your tax liability and what those fees would be, so you can kind of weigh the options, because you may think to yourself, well, doing all this extra work, I may not see a benefit of only $3,758, or it could be you're even saving less, with all the hyperinflation going on and fees going up, the difference may be a little bit less than the $3,758. So you just want to make sure that you ask your tax preparer about the selection for an S-Corp and what you guys can do to make sure that you're saving as much as possible. Thanks, everybody. I hope you enjoyed the video. And like I said, I'm Tamarcus Williams, CPA, always here to help you guys try to figure out different ways to reduce your tax liability. If you enjoyed the video, please leave a comment and leave a like on the video. And also, if you want to subscribe to my channel, I'll make sure I'll drop content for you guys every week before the next busy season, so you can make sure you're saving on your tax liability. So thanks for tuning in to the video. I'll see you guys on the next one.